Now, during the webinar, we will be asking you to provide us some information so that we know who we're talking to, who's in our audience here today. And we'll be asking to fill in a short, a couple of questions on a poll, and those will come up shortly. While that's happening, let me tell you a little bit about the Australian Institute for Commercialisation. It was established in 2002 to work with Australian industry, research organisations, governments, inventors and entrepreneurs to create high-value jobs and grow wealth through innovation. The sorts of things we're not-for-profit, and we work in the areas of innovation, commercialisation and collaboration. Maybe some of you have participated in the Inventor Service. That's a service that we run for Queensland on behalf of the Queensland Government. You may also have participated in one of our workshops or webinars as well, so Ideas to Market, Business Model Innovation, and some of the webinars we've been running this year. We also offer consulting services. So Evert, I'm going to... Oh, great, thanks. Sean's just popped up. So in the audience today, 64% of people participating are in established businesses and 36% are in startup businesses. And that's useful information for us to know, because depending on the sort of business you're in, that gives you slightly different options in your financing. Okay, so I'm going to start and give you an overview of the different financing options for new product development, and then Evert's going to drill down into a very successful model that Syngineering uses. It's an innovative hybrid model to help you finance your new products. Let's have a look at, when we're talking today about new product development, this is a general high-level commercialisation pathway. So we're starting here with our research, and hopefully we're starting with market research. Where's the opportunity? And then we get into the technical research for the product development to apply a value proposition to that opportunity. Then we apply that research into a proof of concept demonstration, and then we go through and do more development to optimize that concept into a workable product. We develop a working prototype. That is a technical prototype. It's pre-customer and pre-market testing, and then we go to full-scale testing and commercialisation. Now that's a very high-level view of the commercialisation pathway, but I want to show you that particularly today we're talking about new product development, not new product commercialisation, because really financing that is a whole, that gives you some different options, and it's a whole webinar in itself. So today we're looking at this, the starting end of the new product development cycle, and really at this end we have ideas and we have early research, and we have at this stage low commercial value because it hasn't been proven in the market, and it's high risk, and that in some ways shapes and limits the sort of financing options that you have. The other further down the commercialisation pathway, as you develop your new product, you de-risk it, because the further you develop it and test it technically and with potential customers, you have an indication of interest from suppliers, from customers, you're de-risking it and increasing the commercial value, and that actually opens up some different funding options for you as well. Now Sean's just, thanks very much for participating again in the poll. So 80% of people who are listening are looking for finance for new product development at this stage. Let's have a look at, in the business there's really three basic sources of finance: money that's earned through the business, money that's borrowed in the form of debt, and money that's invested in the form of someone else taking an interest in your business and bringing finance there. In terms of in terms of how the options that you have, there are some things that you need to consider. Which are the options that are going to be best for you and your business and you're going to be comfortable with? So some of the things to consider are you in an existing business or a startup? With a startup, it's highly unlikely that you'll get debt funding because of the bank's investment style and their risk profiles. So which stage of the business that you're at will influence funding. The stage of new product development. The earlier the stage, we'll have different products, different finance options from later stages. The amount of finance you're actually looking for, and whether you're comfortable with people investing in the product or in your business as such, because some investment models are actually investments not in the product but in your business as a whole. Also, the amount of risk you're comfortable with, the amount of control that you're looking for, and the time frame that you're wanting to move this product to market. All of those things will influence your financing strategy. Also, your new product development and commercialization strategy. So can your new product development be staged, and therefore can your finance be correspondingly staged? And that may give you some flexibilities in the sorts of financing you look for. There's often good synergies in having an investor and an industry partner invest in your product or business, depending on the model you're using. And also your company structure. We see quite a lot of companies that have an underlying trust structure, and that in some ways limits your financing options when it comes to government and investor options. So these are all the things you need to consider. Let's start where it's easiest. If you can finance your new product by reinvesting in your business, that's probably the easiest way to go, or leveraging your savings. And then we go to the friends and families, and be careful with that. There is also a limitation on that through the Corporations Act. But this is the low-hanging fruit, if you like, the easier options for financing your new product. Banks look for three things: information, security, and experience. So, and their perspective is definitely one of managing risk. So, although the opportunity that you have may be a good prospect, the bank will consider it in terms of the whole of the portfolio that they're managing, and that's a totally different perspective. Before you go to banks or any other investors, you need to really do your homework, understand what the banks or other investors are looking for. You only get one shot per investor, and so you need to gather all the information, have it prepared, be prepared for all the questions in advance. I'm not sure how many people in the audience are claiming an R&D tax incentive, or indeed how many people know about the R&D tax incentive. About 9,000 companies throughout Australia currently claim this incentive, and I'm sure that there's more than 9,000 companies throughout Australia who are actually investing in research and development, and particularly in new product development. So this is actually an entitlement from the Australian Government, not a grant. And the key difference in those two is that since it's an entitlement, if you meet the eligibility criteria, you will get this. With a grant, you need to meet the eligibility criteria, but you then have to compete with all the other grants at that time. So, you know, if you are not claiming this, it's certainly worth having a look at. And in essence, there are two different amounts, if you like, whether your turnover is under 20 million or over 20 million, and whether you're in a loss or a profit situation. If you're in a loss under 20 million, so you're in a pre-sales situation or a loss situation, you're entitled to a 45% cash refund. If you're making a profit, it's an offset. And if you're over 20 million, it's a 40% offset. Now, the web link down the bottom gives you the information about the R&D tax incentive on the Oz Industry website, which is shown there. Couple of key points about it: you need to be a company, and remember I said that sometimes your company structure can limit some of your options, so you need to be a company incorporated in Australia, and your expenditure on R&D must be greater than $20,000, and you need to have conducted eligible core R&D activities, and that simply means that you've actually tested or trialed something. You're not simply applying current knowledge to your situation. It wasn't possible to know the outcome of the trial in advance, and therefore you're creating new knowledge in that area. So that one's certainly worth looking at for new product development in particular. The Queensland Government has just announced some new grants, and in the next couple of months we'll be announcing another one. These are the Accelerate grants, Accelerate partnerships. As a general comment, government doesn't fund business as usual, but government will fund areas where they consider it to be market failure or where the risk is high. So as an investor, government is looking to fund things where it will help grow businesses, especially in competitive areas, and therefore it will help contribute to growing jobs and growing the economy. So as an investor, that's where government is driving. The Accelerates Partnership Program is a new grant from the Queensland Government. It is really targeted towards research organisations, but that grant must be accessed in conjunction with industry. So what the Queensland Government wants to do is for industry to gain better access to the wonderful intellectual property and technology and smarts that exist in our research organisations, and this grant is aimed at helping take up that new technology. There is another version of this grant coming out in the next couple of months, and one of our poll questions will be, are you interested in finding out about that? And if you are, we'll let you know when that's launched. And that will be more aimed at the business and around, our understanding, it's around the proof of concept area. So if the partnerships isn't exactly what you're looking at, the Accelerate grant that's coming in the next few months maybe, and certainly we think that that will be relevant for people developing new products. Another source of funding that is more and more popular these days is crowdfunding, and it's been made possible because of the internet and social media, and also low-cost financing options or low-cost revenue options like PayPal. And Kickstarter, the one we have here on screen, is a great example. Kickstarter has been incredibly successful, raising about $145 million in 2012-13. And the way Kickstarter, there's basically two types of crowdfunding. Kickstarter is product crowdfunding. The other type of crowdfunding is equity crowdfunding. So with Kickstarter as product crowdfunding, use is made of the internet. If someone has a new product, new idea, advertises that on the internet, and sponsors, you, me, everyone else can pledge small amounts of money to help the project take off. Now, it's an all or nothing system. If the project fails to reach its target, the pledge amounts are cancelled. And project sponsors or pledges typically receive, apart from the intrinsic reward of helping something that they think is a good idea get up, they may receive early advances of the product, but it's typically things of minor value. Another one here in Australia, iPledge is another type of crowdfunding arrangement, and the note there, crowdfunding can help fund your project without taking away equity or taking out loans, and I guess that's the attractiveness of it. Now in Australia, the laws are keeping pace or trying to keep pace with this model, and you should be aware that that if funds contributed are pulled together or used for financial benefits, they're regulated under the Corporations Act, and if it's considered a pre-purchase, then Australian consumer laws apply. So it is a situation where the laws are monitoring the activity in this area and keeping up with it, and that website will give you more information if you're interested in this. The other type of crowdfunding that we talked about was equity crowdfunding. Venture Crowd is an example of that, and so is ASOB, the Australian Small Scale Offerings Board. ASOB, both of them are interactive online platforms for private pre-IPO companies to connect with social networks. There's limitations. The Corporations Act does limit the number of potential investors in this area, but funders can be friends, family, followers, people that you know. Also, the net is wider. The platform will help you attract sophisticated investors or professional and overseas investors. But be aware, with this type of investment, investors are actually investing in your business. Okay, that's what they're looking at, your business model, the opportunity that you're meeting, your value proposition, not so much the product itself. Whereas Kickstarter was helping you with the product. Okay, another form of investment that you may have heard about are business angels, and great term, but what does it really mean? What is a business angel? Well, simply, it's an individual who invests their money at arm's length in a business owned by a third party. And these people tend to be high net worth individuals. They've been successful in business. They want to keep reinvesting in opportunities and actually to give back to business. They tend to invest at the pre-seed and seed stages, so that means at the smaller amounts, if you like, at maybe $50,000 to certainly less than $750,000. Angels will probably invest a little bit later in the new product development. It won't be down the research end of things. It will be as you get towards the prototype end of new product development. And at that stage, they're probably investing individually, not in groups. So angels bring more than money. They can bring expertise, they can bring contacts, networks, and valuable learnings for your business. Again, they're not investing in the product, they're actually investing in your business. And so they're interested in your business model, the management team you have, all of those things make it an attractive option. Okay, so where do you go for more information about grants and assistance? Well, this website is the Australian Government Grants and Assistance Finder. At the moment, a lot of the Australian grants are caught up with the Commission of Audit, the review, and so are in a bit of a frozen state. While the government's reviewing that and possibly consolidating grants. So we're not sure what will be available afterwards, but some of the things that have been available to date have been Enterprise Connect is a federal government initiative, and it involves a business review, so a review of your business by an Enterprise Connect business advisor to have a look at the strengths and weaknesses and the opportunities and any gaps in your business. Now that's followed up by a tailored advisory service grant, and this means that you can engage a consultant half funded by the government up to a maximum of $20,000 to assist you in the area that has been identified in the review, and that can be new product development or commercialisation for that matter. Enterprise Connect also has connection opportunities for you in terms of if you need particular equipment, whether that's in a research organisation or in a company that you may need for testing. Enterprise Connect can help connect you with that sort of equipment. We can't afford to have all the equipment we need, in our companies all the time. So they can connect you with knowledge and with equipment to help that new product development. The other initiative out of Enterprise Connect is Researchers in Business. This one also is under review at the moment, and this is a program where researchers from our research organisations are funded up to 50% of their time to actually work in your business and help you with new product development or commercialisation, whatever you're looking for. That's where I'm going to. That's been a very high level and brief overview of some of the funding options there for new product development. I mentioned that new product commercialisation is actually a whole discussion in itself, and I'll just flag some of the funding options there in terms of debtor finance, venture capital, venture capitalists won't invest in new product development. It's too risky, too early for them. They are more interested in the commercialisation side. And then also other federal government programs like EFIC and the Export Market Development Grant are available to you as you get further down that commercialisation pathway. So I'll leave it there, and I'm going to hand over to Evert now. And Evert's going to explain to you how Syngineering can assist you in funding your new product development through their business models that they operate.
Yes, hello everyone, and thank you, Denise, for that very informative presentation that you've given us there. Let me just pull up my information on the screen. Okay, welcome everyone to the webinar. I particularly like some of Denise's comments in terms of what is available. Now, what my intention is this afternoon is to talk about new product development from a direct, hands-on position of Syngineering. So we're a mechanical engineering firm, and we're primarily deal with not necessarily new product development, but in the commercial world doing I guess drawing, certification work, and new design. So that has led this company to form a relationship within our industry partners, and we've been getting a lot of help from QMI and others where individuals are coming to us with new ideas, and we tend to see the same sort of questions being asked. So we thought this might be a nice opportunity to give something back and a bit of information that we constantly get asked, and so we can let you know. Now, as I said, we're a commercial entity, and when we look at a new idea that comes to us, we have a stage gate process. Now, this process has been around since probably the early 90s. It's used in a lot of the main businesses, both overseas and here in Australia, and we've condensed it and modified it to suit our purposes within I guess, the manufacturing field. And the thing to be aware of here is where this first stage, this feasibility, is more about the invention or the idea that individuals have before they actually come and see us. So I'll move on to what the feasibility actually entails. Now, a lot of you would have probably already asked some of these questions. Maybe you haven't written them down, but you've got an idea that your product is viable. From that viability stage, we need to ask these sort of questions. Now, if these questions are positive in their outcome, and you have to be quite diligent and be prepared to answer no to some of these questions, that entitles you to move on to the next stage. Now, the next stage is, I'll move on to that next previous slide again, is where you come and see companies like us, like your secondary business partners. Now, in this case, we're talking about Syngineering. It could also be partners such as accounting firms or IP attorneys or industry partners like manufacturers. So perhaps you have an idea to make a widget. You don't have the technology to make the widget, but you know that people in the marketplace will want this widget, but you need a manufacturer with their skills, their technical capabilities, and their manufacturing abilities to help you with that process. Now, if that manufacturing company, for example, likes your idea, they may come on board and you can start some sort of arrangement. In terms of Syngineering, we're more about the business model in helping you get your product to the commercialisation stage, which is, you can see at the end of the process. Just a very brief overview. We would start with identifying the product. We would begin a business study on the actual product, and I would think before we reach the third gate, we would be within 30% of proof of concept. So our business model would be within 30% accuracy of where we believe we would be when we are ready to go to market. Now, funding possibilities, you can see here, we all start at the same point. You've either got, well, there are two things to make this commercially viable. Firstly, you need a great idea. So you need a product that, after answering the feasibility questions, you know there's going to be a market for this product. You need that, and you need money. which is the whole idea of this funding arrangement. Now, once you have those, then there are three options available with a company such as ours. Now, they're a commercial product, a joint venture, or a fully funded product, and I'll elaborate on these three now. A commercial product is simply where you've been able to raise capital, and be that through a private investor, be it through friends and family, or be it through any of the avenues that Denise mentioned earlier, through government grants, and you've been able to manage that process of funding it. The beauty of this is you get a high return. So you're in total control of your project, and it's like essentially hiring a secondary business partner, but you're hiring them on a contract basis. But you also carry, as you can see here, a high risk, because if anything fails in the model, you still are liable to carry all those funds. The second one is obviously a joint venture, which a lot of you would be aware of. Now, a joint venture can take many, many forms in terms of who's involved, the structure of the joint venture, and also the, as I said earlier, the people involved. Now, the thing with a joint venture is structurally, when you structure a business model for that, it can be quite complex. So you need a board of directors. You would be looking at things like a shareholder agreement, your return on investment, and all those things need to be set up quite extensively to make sure that everyone is covered in a project. So again, you have a shared risk and a shared return. Now, depending on what the product is that you have available to the market will depend on the agreement made within that venture. Perhaps, I think I made the comment just recently to someone, if I was able to invent, or somebody came to me and said, look, I have the latest iPhone 7 available to the marketplace, are you prepared to have a joint venture? And the inventor said, fine, you can have the iPhone 7, but I only want you to take 5%, and you be the secondary partner. I'd certainly jump at it because I know what the iPhone 7 might be worth. Then again, if somebody came up to me and said, look, I've just invented something which I believe not to be commercially viable and a great return, I would say, okay, we'll start a joint venture, but we'll take a small ownership, and again, it's reflected in the risk that we both carry. The final model is a fully funded model. Now, that's where the man with the iPhone 7 comes up to me. He doesn't want anything to do with the product because he wants low risk, but he's prepared for a low return because he knows his particular product is going to make a lot of money. So in that situation, a company like Syngineering, or a secondary partner, or a business angel, as Denise mentioned earlier, would probably jump at the chance to take full ownership of the entire business model and the actual invention or whatever's brought to market. Again, the agreements that are signed with this type of arrangement can range from a single payment, progressive payment, a back-end return once your product enters the market, some sort of trailing commission, or a going concern, and these going concerns can last perpetually for whatever term the arrangement's been made for. Again, low risk to the person who brings the idea to the table, but then again, it's a lower return, but it's the opposite to the commercial model we mentioned earlier. What I will say is, I'll give you an example of a product we're currently working on with a manufacturer on the north side. Now, I won't say too much because we're governed by NDAs as to the amount of information I can bring forward. We had a gentleman come to us who needed a particular product built for his manufacturing needs. We tested an idea that Syngineering was able to come up with. We found that it worked. We also found that nobody else in the world was able to, I guess, fulfill this particular need in this particular industry. We tested it in-house with some prototype equipment. Now, we've given the option to the person who required this particular machine to say, what arrangement would you like to come to us with? Would you like Syngineering to fully fund the project, which we were quite prepared to do because we could see there's an international market for this particular machine, or would you like a joint venture, which means we actually need some money up front so we can continue our R&D, and we actually do qualify for the R&D tax grant, and we use that in-house for some of these prototype ideas that people come to us with. By the same token, we've given this individual the option to fully fund this on his behalf, which means he maintains ownership of the product, of the machine that we design on his behalf, but he's paying for it by the same token. At the end of the day, he walks away with the proprietary, even though we've done the design work for him and imparted a bit of engineering knowledge which perhaps wasn't available to him before the process. Again, so that's a very brief, I guess, overview of what a company such as Syngineering does as mechanical engineers. Again, it all depends on what the product is, but I take it we're talking about a lot of manufacturing and engineering type products that people do come and see us with. And yeah, that's about the end of my presentation. I hope that's helpful. I'm happy to take any questions. And back to you, Sean. Sean, are you there?
Thanks. Yeah, I've got it. Thanks, Evert.
Okay, no, thanks,
Okay.
Denise.
Look, that's great. Does anyone? That's a fairly quick overview of new product development. So, are there any questions from the audience at all, or is it all clear as a result of that? Evert, you've done such a great job.
I didn't think it would be that clear.
We're actually seeing more and more hybrid funding models, that is, models that are put together with funds from a number of different investment sources, where there is shared risk and there's comfort from the investors in that, and also as you get later down the commercialisation pathway, there's some investors are able to positively influence the more traditional investors like banks, and that's what Evert can do. I
think shared risk is a big factor. Shared risk versus monetary return, and I think that's something. If you do own an idea of such, I think you have to be very aware that in order to share that risk, people are going to want a return for that, for putting themselves out there. So.
Now we've got a question here. What is the Queensland Government wanting in return for the grant? Okay, so typically governments with their grants will want some co-investment and skin in the game, really, and lots of investors want to see this as well. So the Queensland Government will specify what level of co-investment that they're looking for. Often it's a 50-50 level of co-investment, so you determine the cost for the whole project and then the government shares that cost with you. For some of the Commercialisation Australia grants, the very first one, it was actually a 20-80 split, so the company only had to contribute 20%, but look, typically it's a 50%. Typically government doesn't require you to pay back anything upon successfully commercialising your product. So that's where the government is different from other investors. But when you go to fill in a government grant form, they are interested in national benefits. So how is your product going to align with areas of the economy that where there's competitive advantage for Australia, and also export is something that governments look for a lot. So they'll be assessing the grant opportunity and the investment opportunity through a particular lens, but they will expect co-investment, not payback.
Denise, I've just got.
Yeah.
Oh, sorry. Go on.
No, go ahead.
Oh, I've just got another question here from Ian, where he said, "Can you give me an idea of some of the products that Syngineering's been involved with?" And I'm quite happy to do that. As I said, one of them is a machine that the concept of a machine we've developed for a particular manufacturing firm. We've also we have what we term in-house the boot print drawing. So we had a gentleman come up to us. He had an A4 bit of paper with a few sketches on it and a boot print where it had been lying in his office floor, and he said, "This is what I've got. This is my idea," and it was an absolutely brilliant idea. So we were able to see through the boot print, and we worked together for probably 8 months. Eventually, we did come up with a product that we built. Well, we actually built the working prototype, which is currently using, which is used out in the oil and gas field for helping with some of the pipe work that they put down the wells. And he probably spent to the tune of about, I'd say, a couple of $100,000 to get that product to where it is. But it turned his company around from being, I guess, just another company who supplies the oil and gas fields to being one of the market leaders. Another product which was very similar in how it was presented to us. It was a sketch of paper. Luckily, it was on an A3 this time, which was a mining machine for the industry in WA up in the Pilbara. Now, again, no one had one of these machines which crushed a particular explosive powder. We were able to sit down with the designer. Now, luckily, he had funding, so he had a bit of money behind him, so we took it on as a commercial project. That machine is now operational, and I think they've ordered another 6 since. Also, we've had people come to us with a piece of furniture, is all I'll say about that one. He had a unique piece of furniture which he wanted to sell to the retail market. High-end furniture. It needed a little bit of development. We didn't actually do a joint venture on that one. We did that one as a commercial project because from Syngineering's point of view, although it was a great idea, we didn't actually, once we did our assessment, we didn't see it as a commercially viable product in the big picture, in the big scheme of things. So the products we do deal with, it is very dependent on, it's almost how well you as the inventor can sell it to that secondary business partner.
Thanks for that, Evert. We have another question here. What are the usual timeframes for payback of capital to investors, lenders and angels? What I'm going to say, it depends very much on the amount that is loaned and how well, for investors like venture capitalists and angels, how well it does in the market. Now, I guess the thing to point out here is that investors go in looking to high-risk ventures, and new product development is considered, and startup businesses are considered high risk because they're unproven in the market. So there's a particular type of investor who's interested in that. They are interested in high risk, but they need high return, and they need high return because not all, in fact, the minority of investments actually give them the stunning return that they need to continue investing. So investors look for the exit and for good multipliers on the exit. So for your angel or further down the track for your venture capitalists, they will go in wanting to know how they're going to get out and how they're going to make money in that period of time. And that can be quite a short period of time, like 3 years to 5 years, and you may need continuing funding, because new product development, as you go through the stages to prototype and then you're going to scale up to manufacturing, you often need more than one round of funding to see it through. So I guess, look, it depends very much on the amount of money. If you're borrowing or seeking $50,000, then you're going to have a different return time frame than if you're seeking $500,000. So that's the sort of thing. But remember, what is most important is having a plan for how the investor is going to make their money as they exit. And with a bank, of course, it's interest which you start paying from day one. But with equity investors, they need a way to liquidate that. There's another question here. Where can we find? Sorry, I can't see the whole question. Where can we find all of documentation about the full range of information of various types of funding models? I don't know of I can't tell you off the top of my head of a place in the public domain where I could point you to a web link and say, go here, and this site compares all the different types of models and the pros and cons and gives you the full range of documentation. I can't think of that. I certainly would think that there are consultants around there who have built up expertise in that, and it's not only, part of the expertise is not only in identifying the different types of funding, but in combining them and knowing when to combine them for the different stages of product development. And that can really save you a lot of money and really reduce your risk as well. And it would be very difficult for a website to kind of provide all of those nuances. So if we do come across that, I know that the government has all the government grants, but and the angel sites and the venture capitalists have their own information sites. So all of those different ones are in the public domain, but I'm not aware of something that collates them. Evert, do you know of anything? Haven't heard, so okay.
Yeah, okay, sorry, I was just unmuted. No, I don't. I'm probably in the same boat as you. They, as you say, a lot of people do have their own information on their websites. I would add, however, that it is quite complex.
Yes.
And that if you can get advice from somebody with more of a business background or a legal background, to take that advice on board, and if you can afford to hire someone to help you through that process, and there are companies available that do that. We actually use one ourselves as well. So I'm a firm believer in do what you're good at. So we have someone to help us through that minefield as well, because there are, well, not necessarily a minefield, but there are so many options available, and knowing which one suits your particular needs is very important to identify.
Okay. Now there's another question here. Does the government grant process include a binding and enforceable confidentiality non-disclosure agreement, and what mechanisms are in place to protect the interests of investors and the suppliers of ideas and proposals? Okay. So yes, the government grants are through a confidential process. The government is an investor, it has protocols in place, and it understands the commercial risk and commercial potential. So that's the first part of that question. And what mechanisms are in place to protect the interests of investors and suppliers of ideas and proposals? I'm assuming that is full government grants. Anything, if it's in the case of government grants, then those ideas are handled confidentially. When a grant is awarded, then it comes into the public domain, but like any idea that has value, intellectual property in it, part of the inventor or the entrepreneur's process of commercializing that is to appropriately protect their intellectual property. Now that may be through keeping it as a trade secret. It may be through protecting it through patents or trademarks or other legal means. It may be through a combination of things. So combining your legal protections with some domains and time, making sure that all of those are aligned, so a combination strategy. But really, that's in the domain of the entrepreneur and the investor to protect their IP. The government will treat this confidentially. When grants are awarded and are publicly announced, the X factor behind that, the core IP behind that, is not put in the public domain. What is put in the public domain is the benefits, and that's we ask people to talk in the language of benefits so that you do protect your core IP. So there's a question, next question, what if the inventor is overseas? Sorry, Evert, do you want to make a comment there?
Sorry, just in regards to you mentioned IP protection, and I wanted to just add, we've had a lot of experience with people spending a lot of money protecting their idea before they've gone through the model of the process and the model of commercialising their idea. And once you've gone through that theoretical model, you find out, in actual fact, through the stage gate process, that it perhaps isn't such a viable idea, and yet they've spent thousands and thousands of dollars protecting your idea. And I want people to be aware and very careful not to jump straight into. There are certain levels of IP protection that you can gather through the process, and you can get extensions of up to 18 months after an initial, I guess, progressive protection. So just be aware that it can be a bit of a trap with spending too much money early on.
Look, I'd wholeheartedly reinforce that, Evert. We've seen people spend thousands of dollars and may not have been necessary, or may not have been in the right area. So the business model is really important. And you know, the longer you can keep what you're doing a secret and tie it up through agreements, the better. Because then you know, you're further down the process, and I mean, it is a balancing act, and it's not always the best strategy to go and patent something. There's another question here. What if the inventor is overseas but is interested in manufacturing in Australia? Does that affect grant and R&D incentive? R&D incentives and Australian grants, and certainly Queensland grants as well, are awarded to Australian companies. So, you know, the inventor may be overseas, but is it the company here in Australia, and it's the company that will be awarded the grant. So governments and investors don't give money to people, they give it to companies. So, you know, that may be a way to think about that one. And I would think that would certainly be possible, provided you've got the right company structure. Do you want to add anything to that?
I'll add to your... I would like to add to that, because you're exactly right. If you are talking about funding models, and if you're talking about approaching investors, you do need, and especially in a joint venture, you do need that structure of a company, and you do need the correct people to present that model. To give you an example, if I've got a fantastic idea that I want to present to someone like Santos, I'm not going to get past the front door with my handful of good ideas and go to see the CEO. I actually have to present that and go through due process in order to make the correct connections, and even if it means hiring the correct people to present it to. So you need people at quite a high level of business to be able to sit in on those meetings and actually be heard. So I think it is very important to understand the market that you're trying to gain funding from, and the way they view business, and what they find acceptable and unacceptable, or not necessarily unacceptable, but if you don't present it in the correct way, I think you'll end up with a closed door. I've got another question here from Michael. What percentage can an investor expect in return for a totally funded project? Should Syngineering accept the project? I can't really give you an answer, because it depends on so many factors, Michael. It depends on the product itself. It depends on the viability of that product and what we as Syngineering would see as a possible return. And again, if we're talking about a multi-million-dollar project, a really high-level development process, then we would have a group of investors, which then we would pull into onto the board or into the business model to say, look, you could expect this sort of return, but it's a bit like, what did I hear once back in the 80s? Michael Jackson, for his records, which sold at the time for, I think it was $12 for Thriller, he made about 8 to 12 cents, if I recall, per record sales. So a lot of money goes to the people who are putting up the major amount of risk. And if you're talking about a totally funded project, the risk to the person who brings the project to the table is very low. So you would imagine that the risk is appropriate to the return for that individual.
Okay. Evert, there's another one for you. Are you the contact in Brisbane for Syngineering?
Yes, I am. Yes, I am. So Syngineering is based on the north side of Brisbane. We are about 2 months away from moving to a new building because we've outgrown the building we're in. The beauty of working with Syngineering is we're quite, I guess, attuned to what the market needs. We're not a super expensive engineering firm with, as we call it, the big aluminium glass doors and the flash cars out the front. We're very hands-on, very realistic about the industry we work in. So we work a lot in manufacturing. We do quite a lot of just mundane engineering work in terms of certification work or designing products for the manufacturing industry, say lifting beams, or if you need a set of trestles certified or some shelving certified. So we do those small things. But having said that, we are expanding our reach into 4 satellite offices, one in New Zealand, which I think I said on my last slide. We're down in Sydney very shortly, and we're out in Chinchilla and Roma with the oil and gas in following that up. But yes, our main office is here in Brisbane, and you can certainly contact us on our website, which is w.syngineering.com.au.
Okay. I'm just wondering, are there any further questions? And at the same time, I'm going to ask Sean to release the last question in the poll. And what it is some questions around, are you interested in finding out more about any of the following? And Sean will follow up in the next couple of days with an online survey. And again, this is important for us in planning our next series of webinars. So in May, we will be running a series of, again, 3 webinars, and we're interested in knowing what you want to find out about. So if you could let us know, that will be really helpful for us. So if there's no further questions, we might say thank you very much, Evert. Thank you everyone for participating in today's webinar, and best wishes for your new product development and financing that. We look forward to some great Australian products out there in the marketplace. Thanks very much.